Hello guys. In this video I will try to speak about the value of a stock. It means whenever you see a company price, okay, sometimes you say to yourself, this is too much, okay. Why Google is $1,100, it means $1,100, and you see, for example, Yahoo is $35. I didn't check for Yahoo the price. I'll just give you an example. Okay. Now, why is that? The thing is, it's the traders who make the value of the company. It is not the company itself that makes its price. For example, Google 1100, and for example, you take Yahoo is 3500. It is the traders. It's the mutual funds. When I say traders, investors is all participants of the market. Okay, and a lot of people they really don't understand following this, what we call fundamentals about the company. There are hundreds of thousands of companies that are excellent, but their price stagnates. Why? Okay, even companies that are well known. Okay, Warren Buffett, for example, bought Coca-Cola. Okay, now what is it now? Coca-Cola, there is like 20 years from 1998. It was like $35. Now is it was like $45. Now it is less. Okay, after 15 years, people who bought it in 1998 until now, they lose money. Even it is Warren Buffett who has it is one of his holdings, because the people, they don't understand the value of the company. Okay, Warren Buffett has bought Coca-Cola 40 years ago or 50 years ago. It's long time ago, when the company was so small, and he has too much money. He has bought a big part of the company, like all his holdings. This guy is not, when he buys, he doesn't buy 100 shares or 2,000 shares or 10,000 shares of a company. Understand that. And it was 50 years ago, 60 years ago. Okay, now some companies stagnates because the people, even though they are held by a lot of people, the old people, okay, hold it. Some mutual funds, because Warren Buffett has bought it, you buy it. I have a guy, one of the viewers. I don't think he's a subscriber, because he told me, tell me how to trade. I want to make money right now. Right now? How right now? I'm not selling potato or tomato or something like that. You should go to the free market and you find what you want. I'm not. What is it right now? In order to become, do you want to become a trader? You should need time, 1 year, 2 years, or 3 years, and more to become professional trader. You need money to invest. It means to trade with. You need skills, so you should learn. So it's not a game. We are not here to buy a ticket with $2 and you scratch it and then you have $50 million. Okay, so it's not. You should go to where you buy tickets, gambling tickets, and you buy. It's better for you. Okay, so we are not playing here. It's a business. Now, I will right now speak about an analogy between the value of a company price and coin collecting. I know there are a lot of people who are like collecting coins like silver, and I argue always with them. These guys, I like them. They stack silver, and I argue with them. I give them solutions, ways to make money from these coins. But you know, some people, they get stuck in the ideas, in the fundamental ideas. Okay, so I will give you an example. some people, they think that when they collect old coins, they can have money. Not always. Okay, I will give you examples. If you go, for example, to a coin, $1 coin, like the 18, let's see, I think the 1893S. Okay, you go, you find it, the price, you find it $7,000. What? A dollar in silver is $7,000? Why is that? Okay, who makes this coin $7,000? And if you go to the same coin, but not S, you find it with D or P, it is sold with $20, $25. Why is that? I will give you the answer. It's because it is a key date. It is a coin that it is rare. And in each coin, in US coins, okay, the old coins, it means 1800 or 1900 to 2000, okay, there are just some key dates that are too expensive. If, for example, you are searching coins, you have thousands of coins, or you bought thousands of these coins, and you find one, that is the money. Okay? So, who makes this coin, which is only $1, and in the same year, 1893, for example, all the years with P and D, like Denver or Philadelphia, or where they mint the coin, you find it $20, $25, and then you find one with S, you find it $7,000. Who gave this value to this dollar, although the other dollars the same year they are not? Okay, it is the same as when you value a company in stock market. It is illogical. Okay, you find a stock, like I give always this company as an example, PCYC. It was $6 just in December 2012. Right now it's 140. Okay, you see how much money you can make if you have bought this stock. Now, for me, I bought this stock, but as you know, I'm a swing trader. I don't stay in the stock, so I get 35% of this stock. That's it. But some people, they get too much money from this. Okay, especially those who own the company, especially those who are employees in this company. Okay, so do you understand? It's just because the traders make the market by force of buying. Okay, they are searching for these key dates. That's why it is so expensive. I will give you another example of coins. Now, there is a penny cent. It's just a penny, 1 cent. 1944, made of steel. It's not made of copper and zinc, but they have been mistaken, and instead of making the in 1944 making it with with copper or zinc, they use steel that it was used in 1943. Okay, do you know how much is this coin? It's just 1 cent. Well, how much? In 2008, they find one. It was sold $300,000. Maybe you, in your change, or you are collecting, maybe one day you find this. It's just a number, but not all the 1944 are still. Okay, there are just a few in the world right now. They find 2, but okay, they may find others because there are a lot, but they don't find them. And maybe you have this one, but you don't know. Okay, this is what we call a key date. Okay, why this 1 cent is sold $300,000? Okay, and other cents are sold 5 cents, 6 cents, 10 cents. Why is that? Because it is a key date. Okay, it's the same as a stock market. Some stocks, people, they value them and they buy them too much. That's why the price goes so high. There is no, in the price, there is no reason. Try to remember in the stock market. For example, if I like Facebook, I buy it. Whatever is the reason I have, because in the stock market, you don't have only, because the reason is not important. Why? Because, for example, Google. How many millions of people buy Google? Okay? What is the reason? One, he likes Google because he searches a lot. One, he reads an article before. One, he likes the internet stocks because they go faster. One, someone tells him Google is good. 6 years ago, he bought 100 shares, 200 shares, and that's it. Some become rich. Some they become millionaire when no one knows where the stock will go. So who will decide for the stock? Who will decide for the coin? Is the traders. Okay? It is not. What is this value of this coin? 1 cent. It's made of steel. Does it has a value in itself? Okay? Copper. If it is copper, it is like 5 cents or 10 cents. This is the most. This is the, for example, the value of the copper in this cent. Why it is $300,000? Okay? Because people, they search for it a lot. They don't find. The price goes up. That's it. It's very simple. When you want to buy, like for example, Google now is 1100. It's too much. Okay, it was cheaper before, but people, they buy too much. Some mutual funds, a lot of big traders, a lot of people who like internet stocks, because before they show the biggest move in the market. Okay, even Warren Buffett has been mistaken. Okay, how can he get stuck with Coca-Cola from 1998, which is 15 years? If he has bought just Google or Apple, he will have $1,000 billion, not this 40 or 50. You see, Mark Zuckerberg, the founder of Facebook, he has now 40 or 50 billion dollars. Just he has his company in 5 or 6 years. Okay, so what does this Warren Buffett do? Okay, so these people are young. 26, 27, they have 40, 50 billion dollars. Twitter, again, he will have the same. Instagram, when it is gone to the stock market, it will do the same. People, they become from scratch and they become millionaire. No, not just millionaire, but they become billionaire. And like Warren Buffett, the whole life, he has make 40 billion, 50 billion, but he was rich at that time. He bought too much. Okay, do you understand now? The value of something is what the people give in the market. For example, you go now to any stock. I will give you an example. For example, you go to any stock. You find stock with 10 cents. There is no what we call overbought, oversold. These ideas of fundamental ideas, these theories, all these are theories. Okay? How the fundamentals they have their knowledge, and what they do, how do they come with these ideas? Okay, earnings and a lot of stuff like this. What they do, they look at the past. Okay, they see that some stocks go higher and higher and higher. They try to study this company, why they go higher and higher, and some they don't. They see that these companies are strong. They have good earnings, good management, good. It's clean. You know the stuff that the old people are always singing with. Warren Buffett, value investing, and the other guys. Okay, they write theories. All what you see in the market, books. When you read books, that's why people they can't make money from the books. Why? Because they neglect that the traders are the major force. It's supply and demand. Okay, if a company, it is $5, like PCYC, it was $6 in 31st of December 2012. After 2 years, it's $140. Who makes this company from $6 to $140? It's me, and the other guys and investors who bought it. Who bought it too much because they see that a lot of mutual funds, they buy this company. Okay? I don't care why did they buy this company. Okay? It makes drugs, it makes whatever it makes, I don't care. For me, it's a company, it's a stock that goes up so high. I buy it, I make money. This is the secret of trading. This is the secret of coin collecting. This is the secret. It means find something that can have a value in the future. How do you know? You see the price moving. I will give you another analogy. You see that silver from 2011, it was nearly $49. It's 48 something in 2011. Now silver is $19. How much you lose if you bought silver coins or in the stock market, wherever? How much you lose? You lose like let's say you lose about 65% of your money. You are a loser. And you find some people online, you find companies, they ask people to buy silver because when America collapsed, they use the silver. Who tells you that you can use your silver when America collapses or the dollar collapses or something? Who tells you? If you take your silver, and I have a farm, like I'm growing, for example, potato and tomato and stuff and fruit. You give me your silver and say, no, I don't need your silver gold. I don't need it. Okay? I'm eating food. I don't need your silver. Silver is a metal. What should I do with this silver? People are dying. They need food. They can't eat their silver. And they stock this metal, this silver in their houses, or they get scammed with America retail. You know, even the government participate in this scam because they know collectors. They collect coins each year. They make coins for them, not like these coins. It's not for like proof. They don't make this coins for the public. Okay, they make it for collectors because they see this need. They are addicted to collect metals, silver or not silver, and they give a high premium. It's not the value. The value, for example, of an ounce is $19. They sell this for $35, $40. The government is making money. It doubles its money because it buys silver with 19, and it stock it and in the mint, and it sell it for $45. Who are these stupid people who buy something value is 19? He buys it for 45, and the silver is going down. So that's why some people are wrong in all their life. What they do, they don't understand the value. They try to use the fundamentals, which ruin their life. They ruin their investment. They ruin their life. They stock silver and they want to sell it. They don't find a buyer. The silver is going down. Okay? Gold is going down. Gold was 1900. Now it's 1200. How much you lose? Okay? You lose about 35 or 40% of your money. You are losing money if you bought in 2011. Okay? That's why I mostly go to some channels for silver collection, and I challenge them. He say, it's time to buy silver right now. I say, loser, You are collecting for a long time. 2011, it was 48. Now it's 19. Are you? Tell me. I ask you a question in public. This is your channel, okay? Yes. I ask you a question in public, and in a comment. Don't delete it. Okay. If you bought in 2011 and now it's 2014, we're in February 2014. Are you making money? Oh yes, I'm losing right now, but if there is a collapse of dollar, I will use it. Who tells you that you can use it? Who tells you? The collapse of dollar. The collapse of dollar, it means the collapse of the whole society. If the government, if American government collapses and there is chaos, do you think that you will survive having gold and silver? They will come to your house, they kill you, they take your gold and your silver. What's this that you are talking about? They loot you. They loot your house. Like what happens some places when people they don't find food and you stock food in your house, and people they know that you stock food. What do they do to you? Do you want to survive alone and leave other people die? Okay. So this is just in general. I'm trying to tell you that the market is right always. If you see in the future silver is $1, the market is right. You are wrong. Okay? And some people they say buy now because the future is for silver. I don't see any future for silver. Okay? If you compare the value of silver to gold, it was, I think, in the 50s, 60s, it was 115. 15 silver with one gold. Right now, I don't know. It's maybe 50 to 1. So don't be lured by the word precious metals. I own precious metals. Precious metals, it's physical. They don't lose value. Yes. How can you buy? I, for example, if I bought gold in 2011, I bought a troy ounce. Okay, it was 1900. 1900 is money, right? Right now I want to sell it. How much should I sell it? 1200. This is the market. Okay, am I having a profit? No, I'm having a big loss. 45%. I lost all my wealth. And the people, they still buy gold and they buy silver coins or something, and they say this is for the future. This is for your catastrophe. You ruin yourself. Okay? Let's go again to coins. I will tell you coins. Now I begin collecting coins last year, the other year, like anyone else. Oh, coins. Silver. Where is silver? How much is it? I begin to search. Now for me, I like academic thing. First, I go to books. I read. Because I begin to see some channels. Some are very, very useful because they show you. They don't show you how to invest. Okay? It's very hard. But they show you what to look for, something. I find that in coin collection, it's not the old that it has value. Not the old. Okay, I have given you some examples. For example, if you take 1909 S, okay, it is sold, I think, $2,000 or $3,000. It's just 1 cent. But if you take others, 1909 V or D or P or without any, you find it is $5, $10, $3, $2. Okay, because it's a key date. Now there is another thing. There is what we call varieties and errors. Varieties, it means you find a lot of things in the coin that it is so rare that makes this coin more expensive than the others. Okay, if you take 1955 cent, which is a double die. Double die, it means they struck the coin twice, and you see, for example, 1955, you see it twice. It's very simple to recognize this thing. Okay, this is too expensive. You don't find it. Even if you search coins, you should search a lot, maybe years, and maybe you don't find. Why? Because the other people have searched it and they got it. It's like you. When you want to buy Google right now, you say, "Oh, Google is too expensive. It's 1100 a share. How can I buy it?" But other people, they have bought it when it was 100. Okay? You see that? It means before you. It means you should search for stocks when they just begin to go up, not at the end, and you buy them like now. Okay? All the stocks, some other stocks that are too big, and they stagnate. You should look for companies that are new companies, that they can make a difference. Okay, they can go higher and higher and higher. And I will give you something. Most of the companies that are it's called growth companies. Growth companies is the stocks in these companies. Most of them, they don't give dividend. That's why I find a lot of YouTube channels. Some they explain how to invest in dividend stocks. I challenge them. I always go to some channels. I just give a question. Okay? I say, give me your best dividend stock. Give me an example. I will challenge you. Because a dividend stock, the company, what does it do? When it has its earnings, it takes some of the earnings and it gives to shareholders. Like a dividend. It means like profit for each quarter. Now, the company decides. Okay? Okay, we are set like this. You say to yourself, the company is giving profit. It's good. And it gives me percentage. 2%, 3%, 5%, depending on the company. They are generous. But this money they give you just because this stocks, this kind of stock, stagnate. They don't go up. No. The traders, they don't like these companies. I, for example, I don't buy them. I don't buy a stock because it has a dividend. I buy a stock because I need capital gain. I don't need dividend. Because the dividend, if you are into dividend investing, they take it from the price of the company, of the stock. For example, you buy a stock, it was like $40. Okay? Tomorrow is the X date. It means if you buy it the next day, you will not have dividend. So you should buy it before the X date. X date is just a date where there is no dividend. You should buy it before that day. An example. But next day, you buy it for 40. For example, they give the dividend. You find it 48 or 49. Oh, you say, why? Why I just bought it? Because they give you the dividend, they take it from the price. Okay? It is not something that it is extra that they give you. That's why you see most of the stocks that they give dividend, especially high dividend, they stagnate. If you invest in them, you are in trouble. So, if you can find a stock that has dividend that goes up with capital gain, this is something good. But believe me, this kind of dividend is for the old people. Someone who has, for example, all his life, for example, he has 500,000, he has $1 million. All his life he was having like all his retirement savings and something, and he looks for mutual funds that give dividends, and he is living with these dividends. For example, they give him 10,000, 20,000 a year or something. It is a supplement to yourself, but his investment doesn't go anywhere else. 500, you find 500,000, you find 10 years, 20 years, all is the same. It doesn't change. Why it doesn't change? Because those stocks, the mutual funds, they don't buy them. Why they buy a stock that it is stagnating in one place? Why? You know, mutual funds, they are managers. They manage they manage their wealth, or the fund. They manage the fund, and they need a capital gain. They need to show to their supervisors or to their CEO that the fund is growing good and good and good. In order that the people put their money and buy the fund. Okay, it's a fight. Why some mutual funds, they buy Google, they buy Twitter, they buy Facebook, they buy Yahoo, they buy before, not now. Why? Because they see that the growth of these stocks is very good. They don't give dividend. The company needs its money to reinvest it in the company. That's why I like it. For me, don't give me 2% or 3% a year. Who will accept this 2 or 3% dividend a year? Stupid. Because inflation is 3%. If you make 2% and the inflation is 3%, you are losing money each year. You are not making any money. Okay? So, I don't know people how they are thinking. Even if you are in kindergarten, you have no education at all in all your life. You have no education. You don't go to school. You just know 1 + 1 = 2. Okay? If you just know this, you will be a better trader in the world than any investor, even if he is so highly educated, even if he works in Wall Street. You will beat him. Why? Because you are logical. The other people are illogical. They are illogical. Okay? And the market itself is illogical. Don't blame the market. The market is always going up and going down. It is you where you are. Sometimes the market, almost all the market is down, but some stocks are going up, some. So where are these stocks? You should search them. Okay? Sometimes the whole market is going up for many years right now. And you find some people, they say, oh, last year I break even. Last year I lost money. How do you lose money and all the market is going up? Which stocks are you buying? Okay? You see a stock is going down and you are buying it, and you leave the stocks that each day they are going up and up and up. They're having new highs and new highs and new highs, and you leave them. And you go to losers, companies that they left over. No one is buying these companies because the price is going down. It's so simple. You just see the price, you understand that this company is losing money. If it has lost money last year, maybe this year it lose more. This is the direction, because the market doesn't change the direction very quick. Okay? Sometimes it's for 1 year, 2 years going up, and maybe in 1 year it goes down. Maybe. But almost all these years is good for investment. You see, from 2008 when we have the big crisis until now, 2014, all the years are good. Check the index. Dow Jones or Nasdaq or whatever. Check the indexes, and this is an entry to see. Okay? So the price is made by the traders. This is the value of the stock, as it is the value of some coins. Okay? It's just people, they give value. And this is what you call supply and demand. It's a free market. Some people, they try to hide their failure by speaking about manipulation. Everything in our life is manipulated. Why do you think my stock market is not manipulated? Manipulated or not, it depends on you. Are you making money? If you are making money, you don't care about the market is manipulated. And you can never know what's going in the market in terms of reasons. The big reasons. Why the whole market go down in these 2 or 3 weeks? Why? There is a big sell-off. It's as simple as that. And other people are shorting. Is hedge funds, because hedge funds they can short the whole market because they have billions of dollars. Mutual funds, when they sell, they change their stocks. They have billions of dollars. They sell and then they buy. After you see the market, after some time, you will see the market will go up again. Why? Because those who are like hedge funds, they will cover the shorts if they are shorting. And that's why you see the market going up again. Some other mutual funds, they choose the best stocks and they buy them. You see that there is a change in the direction. They were down for 2 weeks or 3 weeks, and now they will go up for 1 week, 2 weeks, 3 weeks, and maybe they go up for long. So it's always the traders, the mutual funds, the hedge funds, that they make the market. So you should follow the price. Okay? Always follow the price. If you follow the price, I'm not speaking about technical analysis or fundamentals. No, I'm speaking about just the price. If I showed you before an example where a stock was $63, next morning it was 13. Suppose that it's the market, okay? The company has bad news, or they have a lawsuit or whatever, and they lose in the court or something, and they go bankrupt. From 63 it goes to 13. Is 13 the good price? Yes, it is the price. It's not 63 anymore and you lost money. If you were in that stock, you lost money. Don't cry. Don't blame the market. Don't blame manipulators. It is what it is. So accept the market and respect the market. If you don't respect the market will crush you. Okay? The market is doing what he's doing. The market doesn't know you. He doesn't care about you. He is doing what he's doing. Okay? Some days go up, some days go down. It's from the beginning of the market until now there is no change. Okay? There is no change. What's the change that you see? There is no change at all. The price is always governed by supply and demand. Manipulated or not, it's not a problem. Because if the stock price is going up and you buy the stock, you are making money. What's this manipulation do? If the price is going down and you short the stock and you make money, what's the thing about manipulation? People, they want to blame other people, other organization. Some, they go to conspiracy, Illuminati. They begin, to hallucinate. Okay? It's always like this. The rich, they want to control the money. Okay? They don't want to share with you. You should do what you want to do in your life. Don't blame others for your failure. Okay? If you succeed, it's you who has succeeded. It's not someone who make you succeed. It's you who wants you to succeed. So you should do what you want to do in life, or in the stock market, or in a coin collection or something. Okay? I know this video might be long, but I try to explain as much and make an analogy of the value of the stock and the value of a coin, like silver coin or any, and I just give you that supply and demand, that the price of something is what you see. If you go to eBay, for example, okay, you find something too expensive. I say, what? Why this coin is too expensive? And the other year, the same year, is not. Okay? It's the traders who decide. Because it's rare. Okay? If you get lucky and you get this 1944 steel penny, okay? If you get 1 cent and it's 1944 and it is a steel, it's $300,000. Believe me, you can make money with coin collection if you are looking for key dates. Okay? Key dates in stock market is the price. A company that you see the price going up, it might go up again and again and again. Who tells you that it will go down? So follow the price, follow the trends. That's why in the stock market they say the trend is your friend. If the stock market is going up, there is a trend. You just join the trend. The market is so generous. It gives you money because you respect the direction of the market. If it goes down and you lose money, you should respect it either, okay? You should put stop loss and exit. Because if you don't respect the market, he will crush you. You buy to go long, you thinking that the stock is going up, and the market is going for this stock is going down next day, and you lose money. And you ask yourself, why is that? Is there manipulation? And you read the news. Oh, someone has a big hedge fund has shorted the stock. Who tells you that it's a big? And why you are looking for a reason? You lost all your money. Stop crying. Stop whining. Try to find another stock that goes up. Or if you are shorting, try to see a stock going down. Is that simple? Yes, it is simple. But people, they don't digest the information. And they struggle. And they think they are right. That's why they lose money. Okay? So thank you very much for watching this video. If you have any questions, just ask.